So our next startup is Settla. And with Settla, we've got Rob with us, Rob Renson, the co-founder of Settla, and also Adam Edwards. So you are both shared these slides already, so I hand over to you now.
Great, thanks very much. So hi, I'm Rob, and along with Adam and our CTO, Aaron, we're the founders of Settla. Thanks very much for inviting us to meet with you today. We're really looking forward to introducing you to the business, and Adam's going to start us off.
Thanks, Rob. So Settla was built for B2B e-commerce, providing a checkout solution for businesses that buy and sell to other businesses online. We're providing invoicing, payments, foreign exchange, and trade finance, all at the point of checkout. So to give you a quick overview of the B2B landscape, until recently, businesses have purchased and sold goods through more traditional offline sales channels. But now we have the perfect storm of changing market conditions, where millennials are increasingly becoming the new buyers at these companies. And these have grown up with fully self-service digital experiences when shopping, and they're now expecting the same in their workplace. Now, on top of this, we've had COVID-19 accelerating the digitization of the economy. And this has led to B2B companies actually seeing digital interactions as 3 times more important than those traditional offline sales channels. So a fast-growing part of the B2B e-commerce market are online marketplaces. And let me introduce you to Sarah, who owns a B2B marketplace. And this is where businesses advertise goods or services for sale, and then other businesses go on to purchase these, just like eBay. So each party within this triangle has conflicting priorities. On the right-hand side, you have the buyer. Now, the buyer wants to pay by invoice as late as possible in the currency that they operate in. But then on the flip side, you have the seller who wants to be paid as soon as possible in the currency that they operate in. And then you have Sarah, who sits in the middle, and she just wants to keep those buyers and sellers happy so she can focus on growing her business. Now, the current process is a very convoluted online-offline process. Once the buyers identified the goods that they wish to purchase and got to the checkout, the only option really is to pay via card payment. But as a business, they don't really want to pay by card, and they want to pay by invoice. They can pay by invoice, but in order to get an invoice from Sarah, they need to leave the platform, put the items into an email, and email Sarah offline in order to arrange for that payment. And it's kind of similar to how eBay operated before PayPal existed. So when they do receive that invoice from Sarah that she's manually produced, if they want to get extra working capital, they potentially then need to take that invoice to their trade finance provider for financing, and maybe even another provider if that invoice is not in the currency that they operate in. On the seller side, whilst they're waiting for payment from the marketplace, if they want to improve their working capital, then they'll have to then take their invoice to an invoice financing provider to get additional funding, and then even go to another FX provider if that incoming payment is not in the currency of their business. And the key thing here is all of the payment process is not done within the marketplace where the transaction actually started. So here's the solution, and that's Settla. So Settla integrates into Sarah's marketplace, providing a seamless digital online experience. So when the buyer gets to the checkout, they can choose when they want to pay with embedded trade finance, but they can also choose how they want to pay with embedded foreign exchange. And then that invoice is automatically issued to them with the terms that they've chosen. On the flip side, for the seller, they get paid straight away, meaning that there's no working capital burden at all from transacting in that marketplace. And they'll also get paid in the currency that they want to be paid in. Now, what this means is that the buyers and sellers are happy so that Sarah can go on focusing on what she does best, and that's growing her business.
So following on from Adam's comments, and to illustrate this growth in the online B2B marketplaces, in Europe alone, the number of marketplaces has increased from 20 to over 300 over the last decade. And the global B2B e-commerce market itself is huge. It consists of the marketplaces and also the e-commerce sites of individual companies. And it was worth around $15 trillion in 2020, which is about 5 times bigger than the B2C market. And it is expected to continue to grow at over 18% per year to $41 trillion by 2026. Now, Settla initially will focus on European online B2B marketplaces, And that's a market which is expected to grow to around $125 billion by 2026. And if we aim to capture 1% of this market, we would be processing $1.25 billion of transactions per year. Now, the aim here is to really partner with the marketplaces, become embedded in their checkout process, and be a critical part of the transactions. We estimate that we can charge a weighted average fee of just over 2% on transactions, and that consists of a fee for payment processing, and then on a portion of transactions, fees for FX and credit terms. So that would equate to $27 million of revenues in 2026. Now, any industry you can think of will have a marketplace, or if it doesn't, it will soon. So, educational materials, farming machinery, restaurant supplies, chemicals, the list will go on. And to give you a feel of what a typical client could look like, an example marketplace is Surplus Hub. So Surplus Hub is focused on the oil and gas industry, and it's where large corporates such as BP would go to sell old or excess equipment to smaller companies in the industry. So it could be parts for motors and pumps for a few $100s, or it could be up to large drilling equipment that's worth over $1 million, and everything in between. Now, for us to get to the numbers we've just talked about, it would mean working with around 25 of the smaller size marketplaces. So we're currently targeting onboarding 2 marketplaces by the end of this year, before then really ramping up the onboarding over the following years. There are competitors out there in Europe. However, they don't provide a full suite of services and tend to be focused on SMEs, whereas Settla is designed for domestic and cross-border transactions and for businesses of all sizes. And going back to the market, it's a huge growing market, and there's plenty of business for everyone to go after. So based on the market share, market size, and the fees we've discussed, we're targeting profitability in Q4 2023, with revenues of around £4 million in the following year, 2024. And the plan being, once we're up and running with clients and with revenues, we plan to go for a larger seed round next year and improved valuation. In terms of the team and our backgrounds, I've spent the last 25 years working in consulting, investment banking, and most recently at the Fintech eBri. My main focus was advising clients on financial risk management and running client relationship teams.
And my background is all in supply chain finance, where I spent the majority of my career at Barclays, seeing firsthand how cumbersome these processes were for clients who had to deal with supply chain finance products. At my time at eBri, I saw plenty of B2B e-commerce sites who were looking for an embedded cross-border financing solution. And in my most recent role at Trade Ledger, which is where I met Aaron, who was our CTO, who was a senior developer on my squad, and asked him to join because he had super relevant experience in what it is we're working on, having worked at the likes of MasterCard and WorldPay.
So just to summarize where we are, the MVP's in development, and that's being done in-house by Aaron. We're talking to lots of B2B marketplaces, and we've signed an LOI with one of those, hopefully to go on to do a pilot scheme this year. We very recently received £150,000 investment from SFC Capital. We're now seeking an additional £150,000 investment, and that's under EIS at a pre-money valuation of 1.35 million, and really hoping that we can work with angel investors who want to help us modernize online B2B payments. That's all from us. Thanks very much for your time. We're happy to answer any questions.
Fantastic, Rob and Adam. Thank you very much for the great presentation. We've got our first question here for you, for Mario, CEO of PayU. And Mario asks, can you please break down the 2.15% take rate you're predicting among the component parts? And you mentioned payment processing, foreign exchange, and credit. Can you tell us more in detail, what is meant by it and how these are predicted, those numbers?
Yeah, I mean, there's quite a few assumptions within that number. So, I mean, for any transaction that we would deal with, we would charge a processing fee, which could be 3.75 to 1%. And then we had to make assumptions because we imagine that not every transaction will require an FX or a credit term element. Some of it might just be a plain same currency with no credit terms. So we had to make assumptions about what percentage of transactions will need FX, what percentage will need the credit terms, and then we're assuming on FX again. we have an assumption for if it's a spot trade, we have an assumption if a forward trade is needed. On the credit terms, we see some of those competitors we listed charging 2% for every 30 days. So we're again making similar assumptions to what we can charge to the clients, and then what the funding costs could be of that to get a margin. So that 2.15% could vary a lot depending on, there's a lot of variables and assumptions we have to put into that number.
Yes. And as part of your investor meetings, you can go in more details. I'm sure you can show your models, Rob, how the model works, because it might be even bigger than 2.15%, depending on these assumptions, which ones come true. Great. And we've got Cherry Flores. He made a comment in terms of competition. He says it's an interesting proposition, but I believe there's a lot of competition out there. So maybe can you again highlight what is your unique value proposition? What is unique versus the competitors you've got?
Yeah, sure. So there are players beginning to come out in the market, but very early stage, and and over in Europe especially, not really seen any in the UK. What we're trying to really do is solve some of the onboarding issues that some of the marketplaces have when it comes to onboarding for large customers. So for large customers, onboarding these new suppliers because of internal bureaucracy can kind of take a few months. So this is one of the pain points that we're looking to solve. But also what we want to do is have that drop-down option to really embed foreign exchange as part of the offering. Most of these offer kind of card acceptance or automate an invoice with the kind of buy now, pay later type stuff. But what we really want to do is blend in that foreign exchange element too, because a lot of these marketplaces especially are working on a cross-border basis.
That's it. And say we think a lot of those competitors, they're just focused on one or two services at the moment, and we'd have a wider suite of services at the checkout.
Excellent. Question from Colin: what is a pre-money valuation? And a very interesting presentation.
Thank you. Yeah. So pre-money. So before the recent SFC investment, we had a pre-money of 1.2. So they invested 150,000. So we're now at 1.35, looking to complete our round with another 150 to get the value post money up to 1.5.
Excellent. Then which of the roadmap features are included in your financial forecast?
So we've included in there those three revenue streams. So the payment processing, some FX fees, and profits on credit terms. Excellent.
That's great. And then I can see. Let me see if we've got one more. Yes, we've got here a question by Colin, and a very interesting opportunity. Thank you. How do you get the market to work? Do you need buyers and sellers to use your platform and then add more and more participants on each side, or how does it work exactly?
Yeah, so actually that's all done by the marketplace in this example. So we've given the example of marketplaces in here because that's where we've seen the biggest pain point of that. But we are embedding into a marketplace who already has a selection of suppliers and buyers already operating in, but typically they're operating on a very offline basis, as per the example I gave.
Yeah. Yes, that's an important point, so that you work with marketplaces, which are the growing, just growing business model. You focus on business to business marketplaces only, and you allow them to do the payment or the payment processing, which so far nobody provides.
And it's probably worth adding the numbers there when we looked at some of the market sizes, saying we'll initially focus on European B2B marketplaces, but there are also, especially some of the smaller companies with their own e-commerce sites, face similar problems. And so we would also eventually sort of expand to cover some of those as well.
Excellent. So we've got another question coming in from Vladimir. Let's just see if I can find it now, because we've got a couple here. So I don't know if you can easier spot it, Adam and Ben. Let's see. What's here the latest?
I can see a question on will you partner with someone on providing credit, or will you do it on your own balance sheet? Now, at the moment, obviously, we're in early stages, so we're exploring our options, there's a few options that we're currently assessing. One would be for our first transactions, maybe to keep on balance sheet, but we've been having conversations with partners either to provide us a line of credit or to embed their proposition. So we're still trying to just pin that down for our first transactions.
And I think, as Adam says, there's a few different ways of doing it, business models of doing it. And I imagine the business model we use could change over time as we grow and have access to different financing.
Excellent. And a final question here. So here's a Settla nice presentation, which Charles mentioned. But in your early example, can you just remind us on this example you gave with Sarah and where her issues were with the working capital and how you're solving it?
Yeah, so on the buyer side, a lot of the issue, an issue was around the fact that they have to leave the platform in order to pay in the way that they want to pay. With regards to the working capital, which is what you mentioned here specifically, even if they get the invoice, they then have to go to another third party in order to actually pay for that invoice with trade finance, or even then another third party in order to convert the currency. What we want to do is provide that consumer experience to businesses where they can select exactly how and when they want to pay, contained at the point of checkout, to make their life as simple as the consumer experience that we experience.
And it's quite interesting because each marketplace, say, is usually in a different sector and industry, and you can have quite different dynamics. So some industries, it's quite a given that the buyer pays up front before the seller ships the goods. Others, it's 30 days of standard terms. And so there is a different dynamic in each one. And, for some of those buyers, if they have to pay up front, if they can get the working capital from us, then that, they can enable them to, get the goods to them, whatever they're doing with those goods, because they're a business, they're buying those goods to then make money on something else. So if they can have that finance in between to finance that's really helpful for them.
And a final question was on your TAM. So we've got here, again, Mario said, thanks for the presentation, a really big TAM. What makes you believe you can move to charge per end customer?
So the revenue model is going to be kind of from twofold. So we would take a proportion of the transaction fee, which is likely to be negotiated with the marketplace. So the marketplace will typically charge say, for example, 5 to 10% on top of what the seller's actually selling it for. So that's the one way it will come out of their margin, a small proportion. If, however, the buyer wants additional credit terms and also an FX conversion, then we would also add that charge onto them, just as they would pay for it if they were to go to their trade finance provider.
Mm-hmm. And I think, as Adam said, a lot of, if they go down using a credit card route, they could get charged 3%, something like that. So again, it's given them more options of how to pay it, which would be cheaper than the 3%, which, at the moment, someone is paying for that.
Yes.
Via the marketplace.
Well done, Rob and Adam. Thank you so much for your great presentation. The questions answered. So now we go to the poll for Settla. So again, if you go to your poll, which is on the top right side, the red dot which appeared, you get the 4 choices for Settla. So would you like to meet the team online? First option. Would you like to meet the team in person? Is option number 2. Would you like to ask more questions for Settla? Number 3. And the last option would be if you're not interested in investing at this stage. So you click your choice, and then you just vote, and your vote is being saved. So that's it for Settla. Thanks so much, both of you, for joining.
Yeah, thank you. Thanks a lot.